So I don't actually wake up at 3 a.m. every morning. I just did it for this video. I usually go around 5 or 6. And I've been going for a little over 2 years now, consistently. Some people would ask like, yo, Errol, how do you stay so motivated to just keep going to the gym? Motivated? Trust me, I'm not motivated all the time. But once you start building the habit, it becomes a lot easier. But what's most important is being able to trust your word. If you say you're going to do something, it's important to do it, because if you don't, you're going to start lacking confidence. So if you start doing things you say you're going to do, you start to build confidence within yourself. And that's something that has really helped me. You start going to the gym 2, 3, 4 weeks in a row, it becomes a lot easier, right? Sometimes it's still hard though. Like, bro, do I look like I feel like going to the gym today? I got dark and bags under my eyes. My eyes are red. I'm tired. My hair was nappy, so I threw on a hat. So sometimes it's just about sticking to the routine. And for me, I'm a very routine person. I love routines, and that helps me operate through my daily life.
2,000 years later.
So once I make it back home, I'll make a quick protein shake, strawberry of course. But while I make my protein shake, I love to just blast music while I make that, and then I'll hop into the shower, clean up real quick, and then I'll make my way to the desk, where the first thing that I do is I check my calendar so I can see all the tasks that I need to get done for the day so I can manage my time wisely. And then from there, I'll open up the market, check out what the market was doing overnight, look at what it's doing right now in the pre-market, and just observe the market conditions and prepare for market open. So as we get into this live trade, I'm going to talk about my exact thought process, the psychology, show all my executions, and break it down as well as I can. But if you do have any questions, make sure you drop them down in the comments, and we can make a whole video to expand upon whatever questions you have. So let's just jump right into the live trade and get into it.
So I had an initial entry right here, but first things first, we came down here, swept the level of liquidity, and then we also left an imbalance to the downside when we went to go sweep that liquidity. Not only that, we have some liquidity sitting at these highs that we could potentially target. So because our profit target is already there, this is why when these other things are lining up, I will look to take a trade, right? When we're trading above this imbalance right here, that's when I'll start to look to get long to then target that first level. And you can say I had a premature entry. I got wicked in. We didn't actually, start trading above that level. I was slightly too impatient for that, and I got in a little too early. But we then eventually came back to the trade. And there's one thing that I want to point out quickly. So I'm going to pause the video. Because it wicked me in, I knew the trade idea wasn't over. I just wanted to manage my risk, right? But once we start getting that momentum, and I see that momentum kick into the market, and it's very likely that we're going to start trading above this level, that's why I was confident to start adding a little early right here, and then didn't hesitate to add even more to the position right here. Not only that, another thing I want to point out is we talked about earlier in the video how we swept the level of liquidity to the downside, and that's why I'm looking to get long. Right here, you can even tell in a super small time frame, because now I switched to the 15-second chart. We could even quickly go back to the 1-minute chart, but I want to point this out. The thing that you'll notice is we formed another level of liquidity right here. And this is new information that I didn't have 10 minutes ago, right? We formed this level of liquidity. That's why I marked it off. Not only that, we came down here, swept the level of liquidity, and then we kicked in, the momentum kicked into the market, and now it looks like we're gonna start trading above this level, which is gonna give me the confidence to then go and target this level right here. Why am I targeting this level right here? Because it's a level of liquidity, and I use levels of liquidities. I like to use level of liquidity as profit targets, but that's currently what's going through my mind. When I saw this happen right here, that's what gave me more confidence to get into this trade and not hesitate to add to my position. So let's jump back to the video and start it up. And another thing, I didn't let that little paper cut loss discourage me from taking my trade when it happens, right? So that's why it was a high conviction long for me, because of these levels down here when we swept liquidity. And because we're pushing up so quickly, so aggressively, I moved my stop loss. So you can see my average order entry price right here. And then you can see my stop losses right here. That's why I'm showing you my risk. And then I'm showing you the reward. So you can see that's a pretty solid risk to reward ratio, right? I'm risking a lot less than my potential rewards. Then now you can see right here, I'm adding to my position, adding into these dips, adding into these dips. These are my initial entries. Now when we get pullbacks, I'm adding, right? But one thing to keep in mind, when you add to your position at a higher price, it's going to pull up your average entry. So that means you're going to have to pull your risk up a little bit as well. So keep that in mind. And why am I so confident to just add these positions right here? Why am I so confident, especially when we have this red candle right here? I'm confident because this is my process. This is my system. Not only that, we haven't even hit the first profit target or a profit target yet. Now, one thing I want to reiterate, what are the profit targets? What does that even mean? What do I mean when I say that? Levels of liquidity, right? This is the next obvious level of liquidity. That's why I'm targeting this area, because we haven't hit one of those yet. And that is the first one. That's why that is where my first profit target is. And a lot of times you'll have more profit targets, more levels of liquidity very close to these. Maybe there's another one right here and you can target those too. But one thing that I'll always do is either get out my full position when we hit the first level of liquidity, or at least scale out and take some out, right? But right now in this trade, the trades that make me feel the most comfortable are the trades that work the quickest, the trades that are the most volatile, the trades that are actually moving. I'm not to say that those are the only ones that work out, but I'm just saying those ones make me feel a little bit more confident and have a little bit more conviction in the trade as well. Right. I'm just explaining the way that I like to approach the market, the way that I kind of like to go about things. If you like any of it, or you want to maybe add some of the things that I do in my system, some of the thought process that I have, and you want to implement it into yours, feel free to do so. I just like to share what I like to do, how I approach the market, how I perceive the market. And, you know, if that provides any value to you and you like it, then awesome. If it doesn't, no worries. There's not one way to go about things here in the stock market. So, nobody's way is the right way. I think what we do in the trading community is just offer different insights, offer different perspectives and approaches, so we can just help out the community as a whole. So this is what I'm looking for so far, though. The thing that I hate that is the ones that come up right near your profit target, right near that level of liquidity, and then, you know, start stalling right there. Sometimes it's just like, man, just hit my price range so I could just get out. But sometimes I'll like take off, you know, one contract here, one contract there whenever we start inching towards the target level, because sometimes we will sell back off and not actually hit the level of liquidity. And when that happens, sometimes it'll come down here, and then a lot of times we'll wrap back around and then hit those levels of liquidity. And that will typically happen if your timing is off, and you know that'll happen. But I like to try my best to stay true to my system and not get out unless it at least hits my first profit target. Because if it doesn't at least hit my first profit target, this is a dud in my book. This trade idea is invalid in my book if it doesn't at least hit the first profit target, right? I know I'm getting the move. I'm getting a decent move right now, right? But if it does end up coming back down here and stopping me out, it's just a red trade in the series of trades that I'm going to take, and it's inevitable. So I wouldn't harp on this if it does come back and stops me out, because that's just how it is. That's just how it goes sometimes. Even though it's working out in my favor, I just won't touch the position unless it hits my first profit target. It helps me stay disciplined, and it helps me stay consistent to my approach, because I think once you start flipping things around, you don't really have a consistent approach anymore, and you're kind of wishy-washy with your decision making. So that's why I like to just keep the same exact approach every single time. So because we made such a ways up, because we had a pretty solid rally and started making higher highs, right, and higher lows, that's why I pulled up my stop to break even. So now I have no risk on the trade. Initially, I was risking this area, right? Now I pulled my stop loss up to break even. So now if this trade comes back against me, I won't lose any money on the trade. I won't make any money. I won't lose any money. And my stop loss is actually a little bit above my entry price. So technically, I'm locking in a super tiny profit. But what I do know is I won't lose any money on this trade. But man, sometimes it really does just require a bit of patience to let the trade work out, let the chart paint the picture. And sometimes you just you have to sit on your hands. Once you define your risk and once you define your profit targets, AKA your reward, you know, it's either it's going to be those two outcomes. It's going to be one of those two outcomes. So you can just be patient and sit on your hands until that happens. So it looks like we're coming up and I sell right there. So obviously this trade is sped up, but there's one more thing that I do want to point out, right? The most important things about this video, I stayed true to my process. I executed when I need to execute. I added to the trade. I defined my risk and I knew where my profit targets were. One thing that I want to just add before we head on, one thing that I just want to add in this video is sometimes the chart will start to give you more information, which will then lead to your convictions and certain decision making, right? Maybe I wouldn't have added as much to this position if I didn't have as much conviction because we saw this. I didn't know we would set up a tiny, level to sweep liquidity and then reverse and then do exactly what I would like to see. I didn't know that was going to happen. But as it happened, it gave me more information, which then led to me having a higher conviction on this trade. So in the moment, I'm given more data, I'm given more information to make these decisions and be more confident with myself in what I'm doing. I could have not predicted that this was going to come and this was going to happen. It's something that happens in the moment, something you read in the moment, and then you execute in the moment. So that's all that is. Because if you think about it, we set this level of liquidity, we dip down into this level of liquidity, and then we take off, trade through the imbalance that we have right here. We trade through the imbalance, and then we take off to the upside and we target the other side of liquidity that was sitting up here. But look, this is really interesting, and keep this in mind. What was the initial thing that happened in the market to even trigger our minds to start looking for an opportunity? Well, number one, there was a previous level of liquidity, right? There was a previous level of liquidity. We came down here, sold off, swiped that liquidity, and started trading back above that liquidity. Not only that, as we sold off into that liquidity, we left an imbalance right here. If you guys want another video on how to find these imbalances and how to trade around them, let me know. But we found an imbalance right here, right? We traded through the imbalance. Not only that, we already had our profit targets set up. So sometimes you can see these trades coming, because for me to even get into a trade, I need to check some things off my list. Number one, are there potential profit targets, aka levels of liquidity for me to target? Boom, that was already in there. Yes, there is. Second, is there a level of liquidity that's being taken out? There was a previous level of liquidity that indeed was there and indeed got taken out. Check that off the list. Number three, are there any imbalances that are obvious and that were left on the sell-off to take out the level of liquidity? And vice versa. Yes, we did leave an imbalance as we did all those things. So we checked three things off our list. We have our profit targets, aka left previous levels of liquidity, and then we sold off to the downside. We took out a level of liquidity. Not only that, we left an imbalance as we sent it to the downside and took out that level of liquidity. So once I see those things shaping up, that then gets me ready to get into the trade. When I see those things happen, it doesn't mean I automatically jump in. It just cues me and gets me ready to go. It gets me ready and prepared to start executing a position and start creating a game plan on what I'm going to do. So with that being said, you can see I had an early entry right here because I said I like to enter these once we start trading above the imbalance, not wicking above the imbalance. Once we actually start getting candlesticks trading above this area, that's when I'll then go and target the level of liquidity. Or you'll get a premature entry, get sucked into there, and then get stopped out. Because if we don't start trading above here, you might start getting long, and then we actually have more room to the downside, right? The probabilities are a lot higher for me when I wait for the price to come and trade through the imbalance and then target the liquidity to the upside. So I just want to point that out. A lot of trading is a waiting game. And sometimes you just have to let the picture paint. That's what I like to call it. Let the picture paint. And then opportunities will start jumping out at you and becoming a little bit more obvious. But the more that you look at these things, you start developing an eye for opportunity, and you'll be able to pinpoint these things and catch them a little sooner, and be able to create a game plan around it.